Hello and welcome back to Sibos TV. I'm Juliet Foster.
And I'm Jack Delosa. Coming up here on Lunch with Sibos, we'll be looking at the evolving threat of cybercrime and talking to a top global influencer in cybersecurity.
Also ahead, we'll be examining the digitisation of documentary trade and catching up with Swift's Chief Marketing Officer, Meurant, to talk us through Swift's key product developments.
That's all to come in the next hour here on Sibos TV. Cybersecurity professionals are in an arms race with cyber criminals who are increasingly well organised and well funded.
And here to tell us about the evolving threat of cybercrime, we're joined by Jane Frankland, who's been named as one of the top 20 global influencers in cybersecurity by IFSEC. And she's also the author of this book, In Security. This year at Sibos, she's one of the keynote speakers at InnoTribe. So Jane, welcome to Sibos TV.
Thank you.
And look, the world of cybercrime, it is moving at an incredible pace. So if you had to chart our progress, where are we today, so to speak?
The threat landscape is really, really interesting. It's highly complex, and right now I would say we're actually being owned by it. So we're seeing more threats evolve, the sophistication is increasing. Right now, the level of cybercrime is worth about 450 billion, so that's 0.8% of global GDP. So attacks are increasing, sophistication is increasing, but having said that, the sophistication required is not necessarily huge for the amount of attacks. So 70% of the attacks are not sophisticated.
But how is the actual threat evolving? And more to the point, how is it going to look in the future?
Well, that really depends on the actions that we take now. So this is something that I'm actually going to be talking about at InnoTribe at Sibos. So right now, if we don't make certain shifts, and these are really to do with people, to do with getting more women into the industry and also focusing on leadership, we are going to be in a terrible situation. So we have attacks coming through from cyber criminals, from hacktivists, and also from state-sponsored attackers and spies.
Jane, why are cyber criminals able to innovate so quickly?
They just don't have the restrictions that we do. So we are restricted in terms of our employers, in terms of the way that we operate, and also in terms of regulations. So for attackers and cyber criminals, it's so much more open. So the business of cybercrime is huge. So they follow the money trail, and also it's easier for them. So they give what I talk about, giving to gain. So they're much more open, they're much more collaborative, and they're much more run like high-performing businesses. They have support contracts, they have marketplaces, and they are really strategic in how they go to market and who they target.
Right, so that puts a lot of pressure, of course, on those who are trying to combat these individuals. But let's put the spotlight on the banking industry, because you've got cybersecurity professionals there. So just how well are they able to protect their sector from these criminals, given that level of sophistication?
They're much more able than most. They have more resource. And what we tend to find and see in the industry is that most people in charge of it, so chief information security officers, don't have the resources. In finance, largely they do. So they have bigger teams and bigger budgets. So they're much more able. But you've got to remember that the advantage that the cyber criminals have over us is that they only need to find one way in. We have to mitigate risk. So our job isn't necessarily to secure all avenues, it's to mitigate the risk in line with the business's appetite for it. So therefore, we've always got to be prepared for when an attack happens or when we discover that it has already happened, because attacks can be in the network, or attackers can be in the network for potentially up to 146 days before they're even recognized.
It is a fascinating space. Industry experts talk about 5 problems in cybersecurity: industry, education, technology, recruitment, and talent. Are these the right 5 areas for companies to be focusing on?
So yes and no. So the way that I see it is that these are kind of lower down. What we have to focus on is really raising the awareness, improving our communication, and really actually focusing on the leaders. and leaders within the whole ecosystem. So that means definitely the Chief Information Security Officers and making sure that they can communicate to the board much more effectively and are getting access to the board, because many aren't. We also need to help the board because they are not necessarily as cyber literate as they could be, so they need to be able to communicate to the CISOs. And we also need to look at the non-executive directors who also play a part, because they can keep the board accountable. So it's increasing their cyber literacy as well. And then also, in addition to that, is really looking at the city, so the fund managers and the analysts. So there's an awful lot to do with looking at the stakeholders and understanding what it's like in their world, seeing the world through their lens, and fundamentally making sure that we can communicate effectively so that they understand really what our job is to do, so we can be supported much more.
Let's take a look at the book Insecurity, because it was published last year. The premise, absolutely fascinating, because you argue that the cybersecurity industry is being damaged by the lack of women. Why is gender so important?
Because women see risk in a different way to men, and I'm not discrediting men at all by that, but we just do. There have been countless reports on how women see the risk, differently. So therefore, because we have an industry that is predominantly male, so whether it's 90%, whether it's 80%, doesn't make any difference. We still have an industry that is run by men, and also most of the leadership roles are with men. So if we can't see risk accurately, how can we actually look to defend and protect our environments? And we need the women to come in and to also open up more diversity in general. So more diversity of thinking, of background, socioeconomic, ethnicity, and so on. But we have to do a better job of actually evaluating what the risk is. And the only way that we can do that is through women. Now, women also, interestingly, with regards to this, intelligence increases in a group when you have more women in the group. So there are so many reasons for women to come into our industry, and so many reasons for us to benefit from having more women in the industry.
Absolutely. What can industry do to attract more women into their cybersecurity teams, to strengthen those teams?
So we do have to look at how we are attracting them. But for me, the thing that, and we also have to look at how we're hiring them, but the thing that I'm most concerned about is actually the retention, because more women leave the industry than come into it. And when you look at why they're leaving, it comes down to culture. And the culture is extremely challenging. So I talk about high challenge and low support. And if we have this environment and culture that is asking so much of us, without the support, without that awareness amongst all the stakeholders that I've just spoken about, then they're not going to stay. But I always say what is good for women is good for men too. So therefore, what I see with regards to the challenges to do with women, they're the same for leaders. So we have high burnout and high stress, and certainly with Chief Information Security Officers, many are staying in those positions for less than 2 years, which is not long enough to make the changes that we need to make in order to secure people, environments, countries, and so forth.
We are so glad you are here. These conversations need to happen, and we need to have more of them. Thank you so much for joining us on Sibos TV.
Thank you.
Cheers. Australia has one of the world's most innovative banking industries. It's rapidly building digital infrastructure, including its new payments platform. And here to share with us his perspective on digital banking, including the Australian experience, is Nigel Dobson. Nigel is the Banking Services Lead at ANZ Bank. Welcome to Sibos TV.
Thank you.
Now, we know that globally, banking is becoming digital. So what do you see as the key trends and issues that we need to be looking at?
Well, certainly at this conference, real-time will be a key issue. And I think we've seen the maturity of real-time grow and spread across the globe. And with that, also the development of open banking regimes, I think, are really critical and will be a topic that I think we'll spend a lot of time on. And also, I'd love to see a theme of urgency around meeting our customers' digital expectations. And I think that's one thing that Sibos can do really well, is bring those conversations together and grab the themes and then run with the what's it for, what's the benefit for the customer. And I think that's what I'm hearing more and more as I attend these conferences.
And the new gaming town in Australia, of course, is the new payments platform. It was launched last year.
Yes.
So how does it work?
Well, it's an innovative real-time payments system in as much as it's not a central infrastructure. It's what's called a distributed model that Swift brought to Australia for the first time and very successfully implemented on behalf of the participants. What I love about the architecture is that every bank has its own effective gateway. There's no point of failure, no single point of failure like a central infrastructure, so it's got that resiliency. But it's also got other attributes, like it's 24/7, it's got a data carriage capability that increases the data share between participants. And it's also, we launched at the same time an addressing service called PayID, so people can register their phone number or an email address, and that becomes the alias for their bank account, so they never have to remember their bank account details again. So a range of services and a very contemporary architecture, and we're very proud of it.
Okay, and the litmus test, what sort of reception has it had from businesses and, of course, individuals?
Well, so far it's been rolled out in stages, and this was such a significant project for the industry. Not only was it the implementation of what we call the basic infrastructure, which Swift delivered for us, and the integration of those gateways into our payment stacks, we had to renovate. Every participant had to renovate its own payment stack to become real time, and 24/7, 4.5 to 5 nines resiliency. So that is not an insignificant task, and so we took a number of years. We launched back in February of this year, and we've staged the rollout across the participants. What we're seeing at the moment is the take-up is significant. We've got 50 million accounts that are available at the moment across the country for real-time payments. There's 70 financial institutions participating, large and small, in the system. And last week, for example, we processed in just a week 2.4 million payments across real time. So it's absolutely in production, but not every channel and every customer account is reachable. That'll stage over the course of this and early next year. But certainly the reaction has been, from a consumer point of view, quite good. What they love is the emojis, believe it or not.
The emojis.
Emojis. Who thought? But the fact that you can use a contemporary kind of messaging capability along with the payment is I think, really nice. And it's delightfully fast. And people are surprised when they see money move so quickly. I think for our corporates, they're still waiting for greater reach and greater penetration across the economy. They're certainly looking forward to better reconciliation information, faster cash flow coming into their business, and greater certainty around their payments.
Right, so a thumbs up all round, really.
I think so.
Excellent.
Yes.
Now, look, we know that MPP is also designed to work with these overlay services. So tell us what these overlay services will actually do. How will they enhance it?
Well, the whole idea of how MPP was architected was to build a very basic infrastructure, as I've referred to, but also then have this overlay service capability, which invites not just banks, but fintechs and large techs to come and collaborate and make advantage out of the opportunities that certain use cases could be staged on the platform. They could be anything from a government service sending money to disadvantaged people on the weekend. It could be sending money from insurers to folks who've been hit by bad weather or some natural disaster. And the great thing about it, because it's 24/7, 365 days, you can make a payment anytime. And so the ability to service your customers around the clock is tremendous. So we think there's emerging use cases, particularly one we're focused on now, which is request to pay. And our large corporate customers are waiting for this to be delivered, which is simply being able to make a request to an individual or a legal entity and have that payment returned as an acknowledgement. And we think that's a really valuable service. We're seeing that request to pay service emerge around other real-time economies as well. But that brings in the big billers who would love to be able to receive their money through real-time account-to-account transactions rather than relying on other means. It's going to be cheaper, faster, and better all round.
Growing all the time as well. And what I'd like to look at now are the possibilities, especially those that are being opened up for businesses and public sector services as a result of MPP. It must be huge.
Well, I think the opportunity is significant. There are a number of government agencies, not notwithstanding the tax department who are quite keen. But also they give a substantial number of refunds, of course, too. So those people can get their money and their refunds faster. I think you get great transparency and an audit trail with MPP as well. And I mentioned earlier how certain government agencies could service the disadvantaged in all manner of situations and times. So I do think that those sorts of opportunities are yet to evolve. But there is a certain network effect around the platform as well. The more participants you have working with an overlay, working with the idea and getting that notion into the economy, the network effect is tremendous, and that's what really drives it.
And the vibe which I'm getting off you as well when you take this overview is this system of partners, an ecosystem of partners at ANZ.
Yes.
So what sort of organisations do you see wanting to be part of that ecosystem that you're constructing?
Look, in general, we think ecosystems are the future of financial services and either driving them or participating in them or providing services into them. Right now, we look for partners that can augment our customer experience. So if we think about our priority sectors like homeowners and business owners, we tend to think that we can provide them with a number of financial services, but we can't necessarily provide them with services that are non-native to banking. For example, searching for a property, or how do I start my business? How do I sell my business? And these are all the kinds of services that we want to bring in and surround our clients with and give them a better digital experience. So partners that can deliver that adjacent service in the context of whatever the customer journey is. Those are the kind of people we want to deal with. Now, they could be fintechs, they could be large established technology companies, or even government agencies. So that's our notion of an ecosystem.
But what it points to as well is that services like NPP are really changing the banking industry. So let's look into the future. How do you see the role of a bank going forward in 10, 20 years' time, a century's time?
Let me take the 5 to 10 year view. Look, I think what we're seeing with the drive and direction of regulation in particular, and I'll use open banking as an example, where the intent of that regulation is to drive greater transparency into the economy, the freer flow of customer data, and give the customer the jurisdiction over that data, the ownership, which is, I think, really important. And I think it's also about how those ecosystems evolve around a range of services, as I said, contextually giving a customer a greater experience. So banks become a service provider to those digital experiences. Now, we may be prominent in that experience. We may have ANZ Blue experience, or we may be almost invisible in an experience. We may just be a payment gateway or some sort of channel to fulfill a transaction. So that's a spectrum upon which we'll sit. And I think we'll want to drive the meaningful strategic customer segments like homeowners and business owners, trade capital flows, and participate in other ecosystems where we provide more utility services. And as I say, there'll be a range of participation options for us.
Yeah, but it's exciting times ahead nonetheless. But Nigel, we have to leave it there. Thank you so much for joining us on Sibos TV. Thank you
very much.
Blockchain has been one of the biggest themes at Sibos over the past few years. Now we're starting to see the first blockchain services being launched into the market.
One of the earliest is called Innovation in Payments, known as IN, from JP Morgan, which was launched at Sibos Toronto. To tell us more about IN's first year is Emma Loftus, Head of Global Payments at JP Morgan. Emma, welcome to Sibos TV.
Thanks very much.
Now, before we jump into the details, talk to us about IN. Why did you set it up?
What we were looking on with cross-border payments were areas of friction where we could apply blockchain technology to help expedite and eliminate that friction in payments. We launched IIN as a pilot in 2017, focused on compliance inquiries. Someone said, why compliance inquiries? It's a key pain point for clients when we talk about cross-border payments and things that may slow down cross-border payments. Compliance inquiries and filtering those transactions to be able to comply with our regulatory obligations could take 2 to 16 days. So when we looked at blockchain technology and we looked at an opportunity to apply that technology to speed up payments, that was a perfect use case for us. In 2017, we asked 2 of our key clients at JP Morgan, the Royal Bank of Canada and ANZ, to join a pilot with us to experiment with the technology, and that was the birth of IN. It's a secure blockchain network where we exchange data associated with compliance inquiries through the blockchain network sequentially in a secure manner through the blockchain.
Fascinating.
Yeah, and it's certainly grown because in the first year you had something like 75 banks who signed up to it. So what has their experience been of using that system, and how do they feel that it's impacted on their business?
Let me give you some late-breaking info. So in preparation for Sibos, we have 100 banks who've already indicated that they want to join the network.
Wow.
So it's been very, yes, 100.
Good
So it's very exciting. You know, this is what happens when you get ready for a big conference. More and more people say, hey, wait, I'm ready to join. The pilot with ANZ and RBC went very well. What we were looking for was, does blockchain work to actually help speed up these transaction inquiries? And what we experimented with the technology when we went live was, does it actually work? Because if you're thinking about it, with payments, you don't want to just throw new technology in there. You actually want to figure out, does it actually help? And through the pilot, that's what we were proving. So the use case was, hey, these inquiries take a long time to resolve. If we were to apply a blockchain to the sequential nature of those inquiries, short-circuiting that by linking all the banks together, does it work? The answer was yes. So we decided to move into production, and that's when we started talking to many of our correspondent banking clients to see if they wanted to join.
And Emma, if we extend that line of thought to the benefits of the bank's clients, the corporates themselves, what are the key benefits for the corporates?
Well, with the experience, what we were trying to prove, does it speed things up? So you would think, hey, if the technology actually works, that would be a better experience for everyone, and we've proven it. When we talk about compliance inquiries, what we're looking for are typically three pieces of information. It's name, date of birth, and address. So what happens is you are filtering transactions against these lists. And if something stops as a false positive, you need more information to clear it. Linking the banks on a blockchain means you don't have to contact all of the parties in the payment instruction to get that information. You get it immediately. And something that could take 2 weeks to resolve, down to a couple of minutes. How is that good for everybody? Faster payments are good for everybody. Eliminating friction is good for everybody. The payments experience is uplifted.
Seamless business, basically.
Absolutely.
And what would you say is the significance of it for JP Morgan and also the banking community generally? Because clearly there's a lot of excitement about this.
So 3-4 years ago, we were all out of business. FinTech was going to eat our lunch. If you were in payments, just give it up. Everything was going to move to the blockchain. For us, this is a great example of how banks can innovate. For us, it's an opportunity to apply new technology and new thinking to business problems that banks understand very, very well. We have the expertise. We understand how to apply the technology. What we've done is done it quickly, rapidly, through a partnership model, and we think that this is the model for innovation going forward.
Let's dive a little bit deeper into that. Can you talk further about how the adoption of this technology has allowed the firm to innovate?
So the way JP Morgan approaches new technology is very much through a center of excellence model. So what we do at the firm is we pool experts who have experience in typical technologies. So in this case, it was our blockchain center of excellence. Pairing that team of experts with my product team, we came up with the use case around compliance inquiries and got the technologists working on the model to actually solve the business problem. For us, it worked perfectly. So new technology, people who have experts, product people really steeped in how do we do things today, putting that brain power together to innovate. For us, I think this is the model of the future. This is probably how we're going to be rolling going forward in new product development, new technology applications at the firm.
Yeah, and looking at it from that development perspective, how does working with blockchain compare to other technologies?
For us, it was very exciting. We think the way correspondent banking and payments has evolved over the years has really been a result of the existing technology capabilities that were available. Blockchain for us is very exciting because the old sequential way of exchanging information from party to party and bank to bank is now connected all of those parties. For us, we can come up with many, many ideas. We're linking participants through a secure data exchange would really speed things up and help make things more simple going forward.
As you say, initially in is for exchanging data for compliance inquiries. How do you think that might expand further to further support services in the future?
You know what? We started with a use case for compliance inquiries because that was a common problem for many of the banks that we do business with. If you think about it, though, with data exchange, it's just information. There are other types of inquiries. There are use cases around payments fraud that we're looking into. If there was a way to actually rapidly assess whether a payment is valid or not using the blockchain technology, that's exciting. A lot of our clients would like feedback about their payments. Are they formatted correctly? Have I actually routed them as quickly as I can? Or at least cost routing. Could I actually choose another path to route that transaction through a cheaper alternative? Those are all the types of things that we think through a network we could actually add value to the participants.
Yeah, because clearly innovation is the key to what JP Morgan is doing. So what can we expect from you in the future? You've set a very high benchmark already.
We have. I don't know what I'm going to announce next year. We're already worried.
We're already looking forward to it.
You know, payments for us is core business. So what we're doing and applying innovation to payments at the firm is protecting that core competence and actually leveraging that and transforming that ourselves. So you can expect more, particularly in the payment space, and then more developments on IIN.
We very much look forward to seeing that. Emma Loftus, thank you so much for joining us.
Thanks very much.
Thank you. Documentary trade still relies heavily on paper-based systems where paperwork has to be literally moved from one place to another for processing.
Here to tell us how the digitisation of documentary trade could be a game changer for corporates, banks and customs, we're joined by Sam Mathew, who's the Global Head of Documentary Trade at Standard Chartered. Sam, welcome to Sibos TV.
Thank you, Jack.
Now, Sam, why is so much of documentary trade, such as letters of credit and bank guarantees, still paper-based?
Jack, a lot of it is legacy, history. Think of it similarly to the newspaper. 20 years ago, when the internet first came on board, people said, hey, the newspaper is going to be dead. But I still like my newspaper with my morning coffee. So a lot of it has to do with the way banks did trade and finance the trade. Inherently, the importer and the exporter don't trust each other. So the bank plays the role of a trusted intermediary. Now, to act as a trusted intermediary, historically, the evidencing of that performance by the supplier and so on was done basis paper documents. And that works pretty well. So that legacy has continued, and that's the reason why it is so prevalent.
What would you say is the impact of the use of paper-based systems on trade?
So, as you would appreciate, there's about 4 billion worth of documents, or 4 billion documentary pages out there in the trade finance world. So that gives rise to a lot of manual handling, process inefficiencies, obviously cost intensive, but most importantly, it gives rise to potential errors because a lot of data is manually captured from these pages onto digital systems. So highly inefficient, and that systems are legacy.
Right, so given all of that, what is the impact on the banks themselves?
So clearly, as we go into finding more efficiencies, digitization and technologies such as blockchain are knocking on our doors. It has already started happening in other industries. Banks are looking, and clients are looking at ways to digitize this trade. If you think about it, 10 years ago, not many corporates or banks had a chief innovation or a chief digital officer. We would normally talk to a CFO and a CIO. But the Chief Digital and Innovation Officer is a new role that has been there for the last few years now, with the focus that is needed to try and digitize some of these flows. So the banks are looking at how we digitize, both internally, because paper is not going to stop. So we've got to look at how we convert the paper to data at the first point that it touches the bank, but also how we connect to clients in a digital manner so that the paper itself can be eliminated.
And when documentary trade is digitized, what's that going to look like?
Think about this. Think about the experience you have when you walk into a supermarket physically and pick up goods and pay for it with cash versus being on an online marketplace. You click, select what you want into your basket, and you pay for it digitally, right, using your card or whatever e-wallet it is. So I think in the ideal end state, you will have a situation where the importer and the exporter are contracting on the online platform. Whatever the contract calls for is digitally encoded, and the proof of whether shipment has happened, whether the goods have been loaded, all of that will happen digitally, and the importer, exporter, and the banks involved can see all of that digitally. In other words, it will all be in one place with data flowing between the partners as opposed to physical documents flowing. So it ideally should be seamless and therefore bring in a lot of efficiencies.
Okay, so let's hold that thought and just take it a little bit further, because what would a digital system actually allow businesses, banks, and customs to do that they can't do now?
Right. So if you think about it, physical paper today flows from the exporter to his bank, to the importer's bank, to customs, to the importer. Now, if you could digitize that flow end to end, it will bring in a lot of efficiencies in terms of how much time that takes, first of all. Second, the manual errors I talked about earlier would almost be non-existent. So from a risk management and mitigation perspective, the risk of double financing, the risk of fraud, the risk of inadvertently financing a flow that you are not supposed to finance because of sanctions controls, with the paper trail didn't really tell you. All of that risk can be mitigated. So risk mitigation, efficiency, processing costs, and simple turnaround time would be some of the benefits.
Sam, you're based in Singapore. How are some of the countries in Asia digitizing documentary trade at the moment?
Right, Jack, so I talked about corporates and banks having now a chief innovation and a digital officer. So there's clearly a lot of work happening in the industry, both at the client level and the banks level. But there's also a lot of work happening at the regulatory level. So you'll find that regulators such as the Singapore government is getting on to create a national trade platform domestically. Hong Kong is trying to do the same. Bank of Thailand announced something similar. So there's a lot of work happening by the regulatory bodies to see how we can digitize, first of all, in the domestic economy, and then connect the dots cross-border.
When you take the much bigger picture, we know that trade patterns, they're changing dramatically. You have rising protectionism in some parts of the world and also greater inter-region trade in Asia. So how is this going to impact on the digitization of documentary trade with that bigger backdrop in mind?
Right. So, look, everybody is looking for efficiencies. At the end of the day, processing costs and where trade margins are today, also with the tariffs rising and potential protectionism coming into a lot of the regions that we operate in, everybody is looking for efficiency. So there'll be, I think, larger south-south flows compared to large inter-regional flows. There'll be more regional flows going forward that will be driven by a lot of the large consumption economies like India and China, for example. So I think open account trade driven by domestic consumption, domestic supply chain is going to become a lot more prevalent. And those flows lend itself to a lot more digitization than some of the letter of credit-based flows.
Certainly an exciting space to keep watching. Sam Mathew, thank you so much for joining us on Sibos TV.
Thank you for having me.
Thank you.
Cybersecurity is one of the key themes at Sibos 2018.
And to understand how that threat is changing and the implications for correspondent banking and securities, we're joined by Jim Freis, who's the Chief Compliance Officer for Deutsche Borse Group, and Mark McNulty. Mark is the Head of Clearing and FI Payments at Citibank. Gentlemen, welcome to Sibos TV. Jim, can I start with you, because you've been combating financial crime for over 10 years. So in your opinion, how is cybercrime and cyber attacks evolving?
Well, cybercrime is a constantly evolving threat. They're probing and looking for the weakest links. But really the thing that we see more and more is how sophisticated the schemes are getting. They really understand more and more about our financial business. The thing that doesn't change is they're looking for where the money is. And that's why the financial industry is constantly under threat.
Mark, let's look first at the banking industry. Which threats are most concerning to the community?
Well, I think as a banker, you have to be worried about all different types of cyber threats. You know, whether it's threats that are designed to disrupt, whether it's attacks that are designed to steal information, or whether it's attacks that are, in essence, good old bank robbery and designed to steal money. And I'd say, given the conference that we're at, it's worth probably zeroing in on the last one in terms of attacks that are designed to steal money. And I think it's critically aware that banks around the world, are super aware of the level of attacks that are happening and have robust programs in place to help mitigate that risk.
So given that degree of awareness that's required, how can banks best protect themselves from cybercrime and cyber attacks?
Well, first and foremost, banks need to have a robust cyber resilience program in place that's, organized around the principles of, protecting your own environment, detecting if an attack does occur, and then having procedures and protocols in place to respond if an attack does occur. So it's possibly not able to deep dive into any of these things today, but I would say that one critical element that banks need to be have in their mindset is that cyber security is not the responsibility of any one function. It's the responsibility of the business in partnership with multiple functions to make sure that a comprehensive response is formulated.
And Jim, in the securities industry, are the threats the same or different to those facing the banks?
It's certainly similar to what Mark said. It's part of a whole concept in your defense mechanism. But in securities, you have more points of attack because you have the issuer of securities, you have the structure under which it's bundled, and there's more players to a transaction before you get to an investor. So each one of those can be a potential vulnerability.
And how should the industry respond to those risks?
I think the aspect that we see is the industry coming together and sharing information in real time, knowing where those threats are coming from and some of the actors, because it's only if we have that response together can we be successful.
Jim, you're the lead for GPI at Citibank, so you've seen firsthand how much faster payments are becoming. What are the implications of faster payments from a fraud prevention perspective?
Yeah, well, GPI is showing, how fast payments are, right? So cross-border payments through GPI are going end-to-end with credit to the beneficiary 50% of the time in less than 30 minutes. So super fast. But, it's important to note that faster payments themselves don't increase the risk of fraud. But it does highlight a couple of key facts. One is early detection of an attack is absolutely key to help in the recovery. The earlier you identify an attack, the much greater chance you have of successfully recovering those funds. It also highlights the need for the industry to have really effective means of interacting with each other to try and stop payments that are fraudulent, that are traveling across the ecosystem. I think historically, this hasn't been a sort of strong point of the industry with manual processes that are clumsy. But again, Swift's GPI initiative in terms of stop and recall functionality is an attempt to do exactly that. It's going to go live in 2019 and will systemize the interaction between banks. So I think these are some of the important elements that are going to help, respond when there are attacks and stop faster payments.
Jim, as the payments community does respond to these cyber threats, what are some of the things the larger organisations can do to help smaller organisations?
Well, speaking from the perspective of a financial markets infrastructure from the Deutsche Börse Group and Clearstream, I'm working very closely with Swift in that regard. It's all about standard setting and the notion that if you're worried about the weakest link, making sure that all players as part of the community have some type of minimum standards and that we're sharing information under a common theme. Swift efforts to develop standard questionnaires, attestations, and sharing information in that regard is critically important.
Okay, and Mark, sharing is collaboration, but what are the barriers to that?
Yeah, without sounding too corny, collaboration first and foremost is absolutely key in this space. Before we talk about challenges, there's a lot of positivity in terms of what's happened already. There's various different intelligence sharing forums around the world that are very effective, that are designed to, in essence, share information on the nature of the threat and also technical indicators in terms of the actual attacks when they happen, which banks can use as part of their defense. Swift's customer security program, a program designed to raise controls in the ecosystem, is by its very nature a collaboration across the industry with Swift. So I think lots of positives. Areas that remain challenging in this space is the sharing of personal information on a cross-border basis. So what I'm thinking of in particular is sharing of suspected or known fraudulent accounts at a system-wide level to try and help stop fraudulent payments going into that account in the future. That obviously has restrictions and challenges in terms of how you can share that information. But I think these areas are going to be continued to be looked at. And I guess the critical point is that we really as an industry need to critically or aggressively continue to collaborate in this space.
Jim, as we're discussing, the payments landscape is changing so fast. Will this cause a shift in the way liability is assessed if things go wrong?
Oh, certainly. We can talk about all our preemptive and proactive efforts, but that's really the question: who bears the loss when something goes wrong? So some of those questions are: what is reasonable reliance on your customer when there's some type of a fraudulent instruction that comes through? And in the real-time payments arena, you have less time to figure things out. So it really is critical that all institutions look at their contractual relationships, look at what they've said in terms of their expectations for their counterparts.
And Jim, just picking up on something which Mark referred to, in fact, it was about the whole idea of collaboration, because we know that there are some markets where law enforcement and financial institutions are working together, forming public-private partnerships against cybercrime. But how effective are they?
They've been quite effective, and I think particularly in this cyber security area, because we have a common enemy and a common threat in that regard. And they actually have created frameworks for sharing information, dealing with some of the aspects and the concerns that Mark raised. We all have to protect customer information and the confidentiality of our data, but there have to be exceptions when it protects the entire system, including against a cybersecurity threat.
It's a really important issue. Now, you're both speaking at Sibos this week. Where can we find you?
So Wednesday, I have 2 sessions. I'm talking at 10 o'clock, talking about how corporate clients are yielding the benefits of GPI. And then later at 3:30, I'm talking about open banking and the impact of corporate treasurers. And there I have no doubt that cybersecurity and the impact of cybersecurity and open banking will be part of that discussion.
Absolutely. Jim?
I'll be speaking Monday at 1 o'clock on financial crime compliance in the securities industry, looking throughout the entire custody chain, how we can set cross-border standards. And on Tuesday about private-public partnerships at 3:30, again, how we can be more effective in working together to fight financial crime.
It's a busy few days ahead for both of you, but Jim Freis and Mark McNulty, thank you so much for joining us on Sibos TV. Thank you.
My pleasure.
Thank you.
Thank you.
Digital disruption is taking place across financial institutions. Now, new technologies are being used to deliver innovative services.
And this is changing the way that banking is done. Here to give his perspective on what's happening and what might happen next, we're joined by Umar Farooq, Head of Channels, Analytics and Innovation for Treasury Services at JP Morgan. Umar, welcome to Sibos TV.
Thank you for having me.
Umar, you're right on the cutting edge. What are the technologies and market forces that are driving disruption in financial services?
I think there's, as it comes to technologies, there's probably 3 that jump to mind. One is obviously data, big data, as well as artificial intelligence. I think it's really having a fundamental effect on how people perceive their business, how they monetize it, and how they really extract value for their clients. And then I think the second one, frankly, distributed ledger or blockchain is having now an increasingly significant impact on how people are approaching everything from infrastructure to value-added services. And I think the final one, frankly, I would call out is artificial intelligence, APIs and open banking, which are making it more and more possible for us to deliver services in a more integrated way to our clients. And then I think there's obviously a host of other technologies like UI, robotics, et cetera, that are also in play, but the first 3 are making a very big difference for our clients.
Interestingly, you mentioned blockchain technology there, and that leads quite nicely to a scheme that JP Morgan has pioneered in focusing on payments innovation. So what impact is that having on JP Morgan and, of course, JP Morgan's customers?
I think when you look at IN, which is short for Interbank Information Network, we really came at it from a client point of view. When you think about blockchain technology, there's a lot of what I would call almost quote-unquote frothiness in the market about what it could do. And when we looked at all the applications, we really wanted to hone in on where can it add real value for our clients. And one of the places where we saw inefficiency in information flows was when payments are transferred across jurisdictions. And some, because of usually data inefficiency or missing data, sometimes they get stuck for days at end. And so IN is our solution for that, which is a distributed network across now more than 100 banks, which can exchange information with each other, and those banks can actually resolve those information inefficiencies to make payments flow much better. So it's having a significant impact on our clients in terms of making their payments flow faster, and obviously it's having a big impact on us in terms of providing a better service for our clients.
Similarly, AI is a much heralded technology. What's your view on how you see it actually applying in the banking world?
So AI is a pretty broad term. It goes everything from machine learning, which is pretty much pattern recognition, to what I would call advanced AI. I don't think there's too many applications of advanced AI in banking right now. Everyone's sort of experimenting with it. As far as machine learning is concerned, there are certain areas where it's now being used pretty heavily. For instance, even things like fraud, where ultimately it's a pattern recognition issue, which is you want to see patterns of flows, and when something is outside of that pattern, you know that there is, at least you should make sure that that's not a fraudulent or not a payment that you should stop. So we have machine learning being applied pretty much across the entire stack, everything from client-facing reporting all the way to the back end in fraud, and we're seeing that technology can actually provide much better transparency, performance, as well as efficiency for our clients.
And one of the other talking points for banks is open banking, in fact, and those API strategies. So what does that mean in practice for corporate treasury?
I think if you think about corporate treasury, they have traditionally interacted with banks in a few ways. Either they used a portal that was designed by the bank, so it's usually a web-based interface, and the corporates interact with them, or the corporate treasury personnel interact with it, or they have file transfers via host-to-host framework, or they use Swift messages. Increasingly, as corporates evolve, I think they're finding better ways to integrate what the banks bring to them into their actual business flows. So to just give you a very simple example, when someone leaves a corporate, so if someone resigns, the corporate has to make sure that all of their entitlements at a bank are removed. That process today requires an interaction through web or through phone calls or some such mechanism. But what open banking does is, to the extent that we can publish some APIs that can be utilized to make that transaction happen, they can literally integrate that into the HR system. So when a person leaves a corporate, they not only get deleted in that corporate from a point of view of what they can do in the corporate, but they actually get also deleted from our systems. So it makes the entire corporate flow a lot better. And it's you'll see more and more of APIs coming through. We've made a lot of investment in the API area over the last year.
And Umar, JP Morgan has also launched virtual branches and a virtual assistant. How are corporates using these services?
I think those two are actually distinct, but sort of go at the same issue. Again, the client's at the heart. Virtual branch, there were certain jurisdictions in the world where we have a few branches, but the country might be vast. And certain transactions, say tax payments or certain kinds of trade transactions, still require paper in certain countries. And so if you don't have branches in every little town and city, how do you provide a client the ability to actually interact with us, upload documents, download documents, provide all kinds of signatures? So we built this solution for those geographies primarily, and clients are using it very heavily, especially in some of the Asian countries. As far as virtual assistant is concerned, that's it was the first artificial intelligence-driven sort of robot that can interact with our clients and have a conversation, not just respond about one query or a point in time, but you can actually go back and forth and keeps the context in mind. And I think it was the first one ever done for large corporates in the world, and we've been expanding it. We actually think that over time, more and more of our clients will probably interact with us using unstructured methods. When they want to ask a question, they don't want to click through 5 screens. They can just type a question and they can get the answer right away.
I mean, these are fascinating developments, but what are the much bigger challenges that banks are going to face as they adopt these new technologies?
I think one of the biggest challenges is that these technologies are moving at a very rapid pace. They evolve quickly, and frankly, the people who are really good at utilizing these is a new generation of very technologically savvy product development people as well as technologists. And I think there's always been a war for talent, because now you're not competing against banks. You are frankly competing against the cutting-edge fintechs and Silicon Valley and all of those companies. And I think that's where something like our brand comes in handy, because JP Morgan is frankly bigger than most technology companies. We have about 50,000 technology personnel across the bank. And we've been bringing more and more of this talent in. So I think that's one. The second thing is speed. So speed of execution at a bank, as you may be aware, is always been challenged, not because we are slow, but because there's lots of regulatory requirements. There's lots of compliance and controls issues we have to take into account. And we are all having to learn and redesign those processes so that they can deliver in this, sort of the brave new world.
Okay, so busy times at JP Morgan. But Umar, Farooq, thank you so much for joining us here on Sibos TV. Thank you.
Thank you so much for having me. Appreciate it.
Our next guest is Meurant, who is Swift's Chief Marketing Officer. Luke was appointed to the role in October 2017.
It's been a busy year since then, as Swift has launched new products and is working on even more. He's here to talk us through the key developments. Luke, welcome to Sibos TV.
Thank you.
Now, Luke, we're talking about the changes and challenges in the financial industry. What, in your view, are the key changes at the moment?
It really is busy times, as you said, in the financial industry. We see a lot of things happening. There are 5 I'd like to mention. The first one is that we clearly see evolving customer needs. If you take payments as an example, customers increasingly expect payments which are fast, transparent, and increasingly free too. So clearly the demand is kind of evolving. The second one is that from a technology perspective, we see so many new things, DLT, cloud, machine learning, artificial intelligence, APIs, etc., etc. All of these have really a breakthrough kind of potential, so can be highly disruptive for industry. And that results in a totally different competitive landscape. We see the emergence of many new players, some relatively small fintechs that go after niche profitable markets, some I would call incumbents, which are being disrupted themselves in the market and start to get into our market, our communities market. And lastly, we start to see very big fintech, which as such are not so interested in financial transactions, but just wants to get their business frictionless in terms of transactions. The fourth one, in terms of key trends, which is important, is cyber. Cyber is there to stay. The cyber attacks are getting increasingly sophisticated, so it calls for a real change to address them successfully. And lastly, but importantly, regulation and geopolitics, of course, very important. I'm going to give just one example on regulation. Open banking, it really has the potential to dramatically shift the value proposition of our community, and I would argue to totally disrupt the value chain from a financial sector perspective.
Now, we also know that GPI has been enthusiastically embraced by the banking community, primarily because of its speed, traceability, and transparency costs. But what are you doing to develop GPI so that it can actually tackle the pain points, if you like, in cross-border transactions, because that is key?
So GPI has been a fantastic success. So that's our global payment innovation initiative. So far, we have more than 1 million payments every day already on GPI for more than $1 billion every single day. Most importantly, already 50% of those payments are credited to the end customer in less than 30 minutes. It really is impressive in terms of speed already. But clearly, we want to be bolder there in 2 dimensions. We want to go broader first in terms of adoption. So we have taken as an objective to get GPI fully adopted by the SWIFT community by end 2020. And actually, already next year, and we'll announce this week at Sibos, we'll introduce a basic, simple version of what we call the tracker that will allow all the banks, all the SWIFT banks, to track their payments on SWIFT. So that's for the go broader. In terms of the go deeper, we also want to provide additional services. By that, I mean let our banks provide additional services through GPI. And a good example of that is what we call pre-validation. So GPI is a great initiative in the sense that it provides transparency. Why is your payment? How many fees have been deducted? Has it been credited? But it would be even better if we could provide the transparency at the time of the payment initiation. And that is shifting from transparency to predictability. That is one of the examples of the new services we are working on.
Luke, as you say, there's a growing appetite for real-time cross-border payments. How is SWIFT responding to this demand?
So we clearly see the demand for cross-border real-time. We believe that our GPI initiative could actually be the enabler for that by hooking through the GPI banks those domestic real-time systems. Now, this is not a dream. It actually is happening. It is happening in Asia. It is happening in Australia. We are announcing today that basically we have successfully tested with banks in China, Singapore, and Thailand, together with banks in Australia, a real cross-border, a real-time payment service between those three countries and Australia. So it is successful and happening now.
If payments are going to get faster, then what about compliance and fraud detection? Because presumably they're going to have to happen in real time as well. So how can the industry address that?
It's a real challenge, you're right. So the faster means also that the pressure on efficiency will be more important. I would argue that inefficiencies are going to become much more visible, but also in the case of fraud detection, much more costly. So we see banks reacting in two dimensions. The first dimension is that they really try and optimize what they can do on their own. So they try and adopt new technologies, for instance, machine learning, if I take sanction screening as an example, to optimize the efficiency on their own. The second thing that we see happening, which is quite relevant for Sibos, of course, is the dialogue happening between the banks to create new ways of looking at the issue. This is typically discussions around utilities. You may have heard about the Know Your Customer utility, which has been quite a significant success already. I would expect now that the next wave of discussions will be on sanctions. You may know that today a typical payment involves 3 to 4 banks and is being screened 7 to 8 times. There must be a better way to do that and speed up the payment itself.
Further to that, what new services will SWIFT offer to help banks make compliance and fraud detection checks at speed?
So for us, financial crime compliance is a very important area. We have been investing massively as a company to develop services for our community. So now we have more than 10 services live across Know Your Customer, AML, and sanction screening. Of course, we don't stop there. We have an ambitious plan. And this week at Sibos, we are launching a brand new service in terms of fraud detection. We call it the Payment Control Service. It is a real-time fraud detection service, which offers a unique value proposition in the sense that there is no installation required whatsoever, no footprint from our users, against basic rules, simple rules and parameters that the user can choose. And very importantly, we have designed it in such a way that it is totally independent from the infrastructures of the banks themselves. We run it on the SWIFT network independently from their infrastructures. Therefore, it is truly a secondary protection layer, a safety net, if you want, on top of the bank's own fraud detection services, being launched this week at Sibos.
And your team, your marketing team, in fact, also delivers Sibos. So what are the sessions that you personally are most looking forward to this week in Sydney?
That's a tricky question. We have more than 250 sessions this week at
choice.
Yeah, exactly. A fantastic lineup of speakers coming from everywhere. So really looking forward to that. I will say the big issue debates would be my choice. We have 4. 2 on payments, as we discussed, a lot of changes in payments. There is one on cyber, very important, and the last one on Asia and innovation in Asia. There is so much innovation in Asia. So really look forward to those 4 for sure.
As are we. Luc Meurant, thank you so much for joining us on Sibos TV.
My pleasure. Thank you very much.
Thank you. That's it for this show, but there's much more coming up here on Sibos TV, including live coverage of the big issue debate on re-engineering international payments in the digital age. That's coming up next.
We'll be back with more in Sibos Today right here in an hour. See you then.